Over the Road magazine article, September 2010, Qualifying for Tax Savings. One of the benefits of writing a tax book to truck drivers is the response I get from people coast to coast. I've had wonderful discussions with accountants and drivers from all across Canada. I also know that accountants are busy adjusting to new regulations, thanks to Enron, etc., as well as preparing for IFRS, International Financial Reporting Standards, which are due January 1st, 2011. It is a very unsettling time for the consistency-driven accounting industry. Unfortunately, busy accountants leave too many drivers alone when dealing with the qualifications and application of meal allowance, per diem subsistence allowance. Too many operators are left holding potential liability or misunderstanding the benefits. I had one individual tell me of a friend who usually paid between $20,000 and $25,000 in taxes every year. But last year he incorporated and only paid $4,000. The implication was that incorporation saved him $16,000 to $21,000. Let me say up front, there is something very wrong with these numbers. The National Joint Council lists Canada Meal Allowance as $84.50, effective April 1st, 2010. Using an exchange rate of 125%, which is way above the annual average, only puts the U.S. daily travel allowance at $105. If incorporating saved him $16,000 to $21,000, it would represent a tax deduction of $131 to $172 per day, providing he drove 365 days in a year. If he drove the national average of 22 days per month, it represents a tax deduction of $181 to $238 per day. Therefore, it is impossible for his numbers to match his understanding. Accountants must make this clear. In my experience, the bottom line tax savings of incorporating with per diem subsistence allowance application ranges only from $6,000 to $9,000 per year. His $16,000 to $21,000 drop reflects something else. My guess has to do with when he changed his business status. I assume he incorporated somewhere between May and July, which means that his self-employed earnings represents only half of his annual income. The rest of his income is represented in his corporation, assuming no T4s. If this guess is correct, I hope he hasn't spent the $8,000 to $15,000 pending taxes. Subsistence per diem does bring dramatic tax savings if reported correctly, $6,000 to $9,000 annually. In fact, if every lease owner-operator in Canada used the system, it would collectively save $150 to $280 million per year in taxes, assuming all the 25,000 to 35,000 operators are still in existence. However, existence is not what determines qualification. Compliance does. Here is the national problem as I see it. Too many accountants refuse to research the system and train operators accordingly. Without adequate training, qualifying for an operator means surviving a meal allowance audit. When accountants require operators to sign liability waivers, the operator is left holding all the risk and defense, a daunting task to go alone undocumented and untrained. Industry disinformation has scared potential users from even considering a change from self-employed status. Too many operators refuse to arrange their financial transactions to satisfy the required employer-employee agreement audit trail. Simply put, many refuse to be trained. They are either arrogant or lazy. Many operators suffer needlessly, yet suffer they will. The Billy Big Riggers flying by the seat of their pants from one layover to the next need to stop being lease owner operators or start being business minded. Have a good trip.